Hello guys, welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about the term depreciation. Now in accounting, the term depreciation is defined as the reduction of the recorded cost of the fixed asset in a systematic manner until the value of the asset becomes zero or negligible. What it means? It means that depreciation is basically a loss, a reduction in the recorded value of that particular fixed asset. So kindly understand that it is basically a reduction in the value of the fixed asset in a systematic manner. That means in every year you require to do until the value of the asset in its entire life of the asset becomes zero or negligible. So depreciation is allocating the cost of a tangible or physical asset over its useful life or life expectancy. That too means to say that you require to depreciate the value of an asset for over its life. So if the life of the asset is for 5 years, so for the next 5 years, you require to depreciate the value of the asset. So depreciation represents how much of an asset value has been used up. That means to say depreciation talks about the reduction in the value of the asset every year till the life of the asset. An example can be all fixed assets like land and building, furniture, office equipment, machinery, etc. So let's understand the definition again. So what depreciation means? Now depreciation here refers to a gradual decline in the value of the asset. Now let me start on with this particular point, that it's basically a gradual decline in the value of the asset. So it will happen every year. The value of the asset is going to fall every year till the life of the asset. Now what kind of asset? It has to be applicable only through fixed assets. So the current assets will not depreciate. It will only applicable for fixed assets. So fixed assets will depreciate. And what is depreciation? A gradual decline in the value of the asset. Why there is a gradual decline? Because the more you use the asset, the functionality of the asset gets reduced. Like for example, the more you use a mobile phone, say I have purchased a particular mobile phone in the year 2019 for a price of rupees 25,000. If I want to sell in the year 2020, I will not get 25,000. I might be getting an amount which is less. Now why it's a less? Because you already have used the asset. You have already used the mobile phone for at least 1 year. So there has been a gradual decline in the value of the asset. Because the usage, if you have used the asset or the mobile phone, the functionality of the phone or the performance of the phone has gone down over a period. So that is the reason why we see a gradual decline in the value of the asset. And it is applicable only to fixed assets. Now the next most important concept here is to understand that do all assets decline? Now let's talk about with an example. So let us explain about from the point of view of a plant and machinery. Second point, I have a building which is also an asset, and let me talk from the point of view of gold. Say if I'm talking from the point of view of plant and machinery, I have purchased this plant of machinery maybe in the year 2018. So naturally, if I'm looking forward to calculate the value of this particular asset as on 2020, naturally there will be depreciation. When we are talking from the point of view of building, we find the value appreciates. Rather, with reference to gold, e-gold I'm talking about as a commodity in the exchange, it normally fluctuates. Now, plant and machinery will depreciate. Building, we said it normally appreciates. And gold normally fluctuates. So there are three important things which we require to understand from this particular point. We said that assets, fixed assets will always depreciate. But with reference to building, how it appreciates. Now let's understand this with an example. Now let's explain from the point of view of building. Now we have taken price and quantity on my x-axis and price. So you might have already studied about in your school days, you might have studied something with respect to demand and supply. So this is a particular demand curve, and let me take one more as a supply curve. So this is a supply curve. Okay, let's take an example from the point of view of building, how it appreciates. Now building also should have depreciated, but it appreciates because of the story of demand and supply. Now the red line talks from the point of view of demand, and black line is basically the supply, which talks from the point of view of equilibrium of the price. Now here is what the price is. Now as we are aware of that there is excess of demand in the market with respect to flat, land and property, whereas supply is fixed. The property or land as such is not increasing. The supply is restricted. Therefore, there is a shift in the demand curve because of excess demand, which resulting in an increase in the price of the property, land or flat, which refers, that is the reason why we say that the price of the product doesn't depreciate, but it appreciates. But if the property is a very old property and not located in an area where there is more amount of demand from the point of view of consumer, then under such circumstances, the price will fall. So, depreciation will be applicable for all fixed assets, like for example, plant and machinery, it has depreciated. Rather, with reference to building, we say appreciate because of the story of the demand and supply and its interaction. Because there is supply is constant, where there is an increase in demand. And from the point of view of gold, we say it fluctuates. Now let's take an example. Now months and the gold price has been taken. Now this gold price are basically hypothetical price which we have taken, which is normally being traded in the commodity market. Now if I try to find out, then we see that the gold price is highly fluctuating. Now we can also find out from here that there is also a trend. Now if I want to find out a trend here, I can say that it's partially moving higher. You can see that the price of gold is fluctuating with reference to the commodity market of buying and selling of gold, and the price is fluctuating in nature. Let's talk about the various methods in depreciation. Rather, we will highlight two important methods to start on with. Once we will move on with the chapter depreciation in details, we will talk about the various methods. Now, in methods of depreciation, there are broadly, or rather to start on with, right now our discussion from an elementary introductory point of view, we will talk about two important methods. One we say as a straight line method, and the second one we say as a written down value method. So let's understand the methods of depreciation. So straight line method, written down value method. Straight line method can also be termed as original cost method. Written down value method can also be termed as a diminishing balance method. So there are other names also associated with it. So it can be either termed as a original cost. Straight line method can be also termed as original cost method. Written down value method can also be termed as something like diminishing balance method. Now, how this calculation normally happens? We use the term known as book value for the value of an asset. Now, if say for example, if the book value of an asset is say 50,000, and thereafter what we do? We less depreciation for a particular year. Say for example, it is 10,000. I'm just giving you an example. So the value of the asset for the next year, which we use a term which is known as WDV. WDV means to say written down value. Now what is the written down value? The written down value is 50,000 minus 10,000, which talks from the point of view of 40,000. So we start from a book value, we deduct depreciation, and then we come down to written down value. Now before explaining the difference between these two particular methods, we want to highlight this particular thing, that straight line method, the amount of depreciation will remain fixed. That means to say that the amount will always remain the same. Whereas when you're discussing from the point of view of written down value method, the amount of depreciation will always be calculated on WDV. So this is what the difference is. Now we will try to understand this particular difference using an example. So straight line method, so we said method of depreciation, straight line method or original cost method, or else written down value method or diminishing balance method. Now we have classified in two heads. There are other methods also, but as of now we will be talking about only two methods to start on with as a part of introduction to accounting. Now straight line method means where the amount of depreciation remains fixed, same. Written down value method means the amount of depreciation to be calculated on WDV. Now let's take an example. Now as per the example, there are two machines, machine X and machine Y. We have taken almost the same information, the value of the asset or the machine which was purchased on 1st of April 2018. So we have purchased the machine on 1st of April 2018 for rupees 1 lakh. And the rate of depreciation every year will be 25%. So 25% reduction will happen every year. And the asset sold on 31st of March 2020 for rupees 45,000. Now say for example, we are using a straight line method for machine X and we will be using a diminishing balance method for machine Y, and we'll try to find out the calculation or the amount of depreciation or the value of WDV as on with respect to the methods under both the machines. Now before we start on, we also require to understand that the asset was purchased on 1st of April 2018. and we have sold this particular asset on 31st of March 2020. Now, so this is 1st of April 2018 and you have sold it on 31st of March 2019. That means to say the asset has been used for a time period of 2 years. So we require to calculate depreciation from 1st of April 2018 to 31st of March 2019 and from 1st of April 2019 to 31st of March 2020. So it's for 2 years we require to calculate. Now let's take this particular value into consideration for machine X and machine Y, and let's solve it and let's see how it happens. So the value of the asset on 1st of April 2018 is rupees 1 lakh. Now since for first year you have used the asset from 1st of April 2018 to 31st of March, I'm talking of this particular period when you have used the asset, so we require to deduct depreciation. So less depreciation for the asset. So depreciation will be how much? Depreciation will be 1 lakh. And what is the depreciation rate? The depreciation rate is 25%. So into 0.25, so that is 25%. So the amount of depreciation is 2,500. So let's calculate for the same for this. So it will be 1 lakh into 0.25, which is 25%. So it's 25,000 depreciation. Now for the first year, you see, either you use straight line method or else diminishing balance method. Whatever method you use, the amount of depreciation remains same for the first year. Now let's calculate for the second. So what will be the value of the asset as on 31st of March 2019? So let's calculate the WDV as on 1st of April 2019. So why I said 1st of April 2019, 31st of March 2019 and 1st of April is just 1 day. So equal to 1 lakh minus 25,000, the value of the asset is 75,000. So similarly for this particular case also the value of the asset remains same. 1 lakh minus 25,000 is 75,000. Therefore, we now require to calculate for the second year. Now for the second year, less depreciation because you have used the asset for full 1 year. So let me copy it from here. So less depreciation. Now when you are calculating for the second year, what I said about straight line method where the amount of depreciation will remain fixed. So what has been the amount of depreciation? 25,000 is the amount of depreciation. So the amount of depreciation under straight line method which we are following for this particular machine X will be 25,000, and the value of the asset will be 75,000 minus 25,000, which comes to rupees 50,000. For machine Y, we are following which method? We are following the diminishing balance method, the second method. Whereas I said the amount of depreciation to be calculated on WDV. Now this was the book value less depreciation, means WDV is 75,000. So for the next year, the depreciation amount will be calculated on 75,000 and not on rupees 1 lakh. And the amount comes to rupees 18,750. So if I subtract from 75,000 minus 18,750, the value of the asset is 56,250. If you check with reference to the problem, we said we have sold the asset for rupees 45,000. So it will be a loss under both circumstances. How much will be the loss? The loss will be equal to the value of the asset was 50,000 minus I have sold it at 45,000, so I got a loss of rupees 5,000. But here the loss is 56,250 minus 45,000, so the loss is 11,250. Now why it happened? Because if you see the value of the asset on 31st of March 2020 is 50,000 for machine X and 56,250 for machine Y. Thereby we can conclude that under straight line method, more amount of depreciation is normally calculated, because if you check 25,000 plus 25,000, it's 50,000 of depreciation. Rather, we apply diminishing balance method on machine Y and we find it's 25,000 and 18,750, and the amount is compatible less compared to that of a straight line method. So in a straight line method, more amount of depreciation gets deducted, whereas in diminishing balance method, where the amount of depreciation normally charged against asset is compatible less compared to a straight line method. There is one more way of calculating depreciation. I'm just going to show you. So depreciation can also be calculated from the point of view of the value of the asset. The value of the asset minus scrap value So what is a scrap value? Scrap value means a residual value. The entire thing divided by life of the asset. Now it means that, say for example, if the value of the asset, if the value of the asset is 1 lakh and the scrap value, which is the residual value, is rupees 10,000, and say the life of the asset is for 5 years, then per year the depreciation amount is rupees 18,000. I hope you have understood this particular concept. So we have discussed about what is depreciation. We have discussed about from the point of view of plant and machinery, building and gold. Where it depreciates, for building it's appreciating, why we have explained, and for gold, e-gold, it fluctuates. Next we talked from the point of view of methods of depreciation, straight line method, written down value method, and we talked about the straight line method is the amount of depreciation which remains fixed, the amount of depreciation to be calculated on WDV under written down value method. Then we have shown it via an example, and we also have shown you one other calculation by which we can also solve depreciation problems. I hope you have understood the basic concept. Thank you. Have a nice day.